Hi, my name is Martyn McCathie, Investment Specialist at Wilson Asset Management. As part of my role with Wilson Asset Management, I assist our founder and Chief Investment Officer, Jeff Wilson, and our Chief Financial Officer, Jesse Hamilton, with the management of WAM Strategic Value, ASX ticker WAR. Listed in 2021, WAM Strategic Value was the group's 8th listed investment company, and the investment process of WAM Strategic Value involves identifying and capitalising on discount asset opportunities, predominantly LICs and LITs trading at a discount to NTA parity. Investing in discount assets can provide investors with reduced volatility, as you're investing in assets that are already trading at a discount to their intrinsic value, uncorrelated returns when compared to the traditional equity markets, given alpha can be generated from the underlying investments that we hold and also a closing of the share price discount to NTA. Collectively, that will provide investors with strong risk-adjusted returns over the long term. As a listed investment company specialist with almost 3 decades of managing and investing in listed investment companies, we believe this gives us a unique insight into identifying and exploiting discount asset opportunities. The LIC and LIT sector has, however, been out of favour for the last couple of years. We've seen consolidation in the sector, with a number of LICs and LITs converting, merging with other entities, or delisting completely. And to offset that, we have seen very few new issuances into the market. We and you invest in LICs and LITs because of the structural benefits. Pleasingly, we're starting to see a return to favour for the LIC and LIT structure. Calendar year to date, we have seen 6 new issuance come to market, and net we've seen expansion within the sector for the first time since 2018. Unsurprisingly, my big investment call for the next 12 months is share price discounts to NTA will narrow across the LIT and LIC sector. The catalyst for closing discounts can be very investment specific, and anyone who's invested in discount assets or LICs and LITs trading at a discount to NTA will know that discounts don't eradicate overnight. We believe there are 2 macro components that could drive investor sentiment back towards the LIC and LIT structure. Firstly, falling or plateauing interest rates. As you can see on the graph, as interest rates have risen, discounts in LICs and LITs have widened. Investors considering investment in LICs and LITs have to consider the risk-free rate when making an investment or moving out or reallocating capital. The other component that I think will drive a return to diversified products like LICs and LIT is a return to fundamental investing and outperformance from active management. As we can see on the right-hand side of the graph, single stocks like CBA have materially outperformed indices and diversified portfolios. We believe that the market is prime for a return to fundamental active management, and diversified portfolios like LICs and LITs will benefit as investors reallocate capital. Accessing LICs and LITs are relatively simple. You can buy and sell them through the ASX with intraday liquidity. Assessing the value of an LIC and LIT and the opportunity set presented by discounts to NTA does require work. With work, however, we believe comes great reward. Investors who buy discount assets will benefit over time for the investment portfolio, for the underlying investments, and the narrowing of share price discount to NTA. This will enhance returns over the long term, but also enhance yield as you hold the company through the investment period. Within the WAM Strategic Value investment process, we actively manage our investments. One of the investments that I wanted to highlight today was Perpetual Investment Company, ASX ticker PIC. PIC has been in and out of the WAM Strategic Value portfolio 4 times since we listed back in 2021. As we've taken advantage of the share price discount to NTA as it's approached 10%, and trimmed or exited our position as the share price discount to NTA narrows, as it has at the moment. Jeff has often referred to the WAM Strategic Value investment process as being twofold: the carrot and the stick. We work alongside boards, management teams, and alongside shareholders of investee companies with the common goal of realising intrinsic value for shareholders. Occasionally, our advice isn't listened to, and we would have to resort to activist-style campaigns. We're currently running 2 active campaigns, Pengana International Equities, PIA, and Platinum Capital, PMC. But today, I wanted to go through an example of a campaign that's recently concluded, PAI, Platinum Asia. WAM Strategic Value first invested in PAI back in April 2023 as the share price discount to NTA exceeded 15%. We believed that the board and the management team of Platinum would have to look at strategies to realise intrinsic value for shareholders. Throughout 2023, we materially increased our investment, taking advantage as the share price discount to NTA oscillated. Fast forward to April 2024, the board of PAI enacted a strategy to convert the company into an active ETF structure, allowing investors to exit their investment at close to NTA parity. The transaction concluded in August of this year, and WAM Strategic Value and other investors had their shares in PAI converted to PAXX, an active ETF run under the same strategy. Following the conversion, we and other shareholders were able to exit our investment at NTA parity. Hopefully this overview and the examples we've shared with you today has provided you with insights to the investment process for WAM Strategic Value. Thank you.